So let's begin the conversation and get Devina Mehra. Devina, what stood out for you as you look back at 2025, and what would be the top 2, 3 big ideas, big bets for you? Expectations?
Always, markets will always frustrate you. That's the thing to remember, that they will never do what you expect them to do. And risk is always something that you do not expect. That is always the theme. And that is the reason why I never give an index projection either in the new Samvat or in December, January. I haven't done it for 3 years. And because that's something you don't know. I'll just give you an example. In 2022, January, the Economist, which is supposed to have all this data of over a century of what happened geopolitically, had given a list of 10 geopolitical hotspots. And they did not mention Russia, Ukraine, where the war broke out the very next month. So that's how off even so-called experts can be. And of course, we are talking about the currency depreciation in India. I mean, just to give you another example, versus the US dollar, but that actually understates how much the Indian currency has depreciated. So because the US dollar has not been a well-performing currency against other currencies. So for instance, against the euro, the rupee has gone down 20%. So I say that nowadays people say that if one has to educate the children abroad, US is not so welcoming, so let's go to Europe. The news is that your college bill went up by 20% in just this 1 year. Of course, the flip side to currency depreciation is the commodity rally in rupees. So off late, the last kicker you saw in metal prices has really come out of the currency. So, that is the thing. And of course, always in every year, there are many news-driven shifts that happen. And this time it was the Trump tariffs and GST. I think those were the two overall industry-wide.
Devina, we'll come to you for your 2026 call, not on the index, but the themes that appear attractive. But for that, let's just recap the week that went by, the last week of 2025. The market ended the holiday truncated week flattish. We obviously broke the 3-week losing streak, but it was not much in terms of a gain. The Nifty was up, close to about 1/3%. Trade on thin volumes. The good part was, from a bull's perspective, the Nifty managed to hold on to 26,000 and the 26,015 mark, which is the 20-day moving average, an important technical support. The Nifty bank marginally lower. The mid-cap index was lower by about 0.1%. So if you call it an underperformance, so be it. But, this week was absolutely flat. Metals did well, the public sector enterprises did well, and rail stocks, they continued to do well this week. In fact, this month they've been good gainers. But on the way down, we had the IT, realty and pharma stocks, which were key underperformers. Gold, silver and metals continued to rally. Among the top stocks of this week, from the Nifty standpoint, Shriram, that continued its up move after the deal was announced, so 7% higher on that. Trent continued to do well. It was one of the worst performing stocks on the Nifty this year, but the last week seen a 7% up move. Coal India as well, on the back of value unlocking news out there, was up around 6%. But in the broader markets, that's where the action was. Hind Copper up around 22%. Coforge, ahead of a possible big acquisition, was down 9% this week. And Dixon also down about 7% this week. But the cake was definitely with all the rail stocks, up anywhere between 15 to 21% gains for Titagar, IRFC, RVNL. And now the next week, as we move on, all eyes will be on one, the monthly expiry. The second thing we'll be watching out for, year-end trade. Will NAV propping continue as we move towards 2026?
Mangala, we spoke about cake, and I must remind you that you have to give cake to everyone else, right?
I do.
Your daughter's first birthday, so
definitely.
Congratulations. But
it's cake and a lot
we are waiting for the cake to come, but anyway. So, Devina, 2-part questions to you. One, for the year gone by in 25, what is one thing that worked out for you in terms of portfolio positions, and one which didn't work out, and which you expect can turn out and work out for you in 26? So, in 2-part, if you can explain those two things.
Okay, so the two industries we've been overweight now for almost 2 years. So one had a good run this year, which was auto components and autos. And pharma took a bit of a pause. So pharma and healthcare was the other area. So pharma has been kind of more of a pause this year. So now we see it again doing well. So those would be the kind of two sides what we took a bet on and what worked out and what didn't.
Okay. Anything on metals, Devina? I mean, did you expect such a big move in the hard commodities and eventually it meant for stocks as well? Are you still bullish on the metal names?
Yeah, I mean, we had a reasonable number of metals, but we weren't overweight metals. So that's it's a kind of a risky thing to play. And as I said, the last bit really was the rupee slide, because even if you are not a big exporting nation, the benchmarking of metal prices always of the international metal prices. And then, of course, there's also been a protection put in place for Indian metal companies, which is the anti-dumping duties from China. Those have been the two additional kind of buffers for the metals in India.
You know, the chatter around US-India trade truce is increasing, and maybe what didn't take place in 2025 is expected to take place sooner rather than later in 2026. With the rupee depreciation that we've seen this year, and if there is a possible trade deal, do you believe some of the exporters would benefit in 2026? And in that, it could make for an investing case?
Well, I mean, if the trade deal does come through, yes, it is a positive, though I think a large part of it is probably already in the price, in the sense that the market has been expecting it for a while. So it's not as if that it is an unknown positive that will come suddenly. And if you look at the listed space, other than, again, some engineering and some pharma, there isn't that much of an export exposure in the listed space. Again, I mean, the IT services is not goods export, but it is services export. But among the major sectors, that would be it. I mean, we have been losing share with our traditional exports like textile, garments, jewelry, etc. So that has last few years, we have not done well in those traditional exports.
Devina, any one turnaround sector that you're betting on?
I generally don't bet on turnaround. I mean, because see, those are high risk plays, and our whole philosophy is that you must manage the risk. If you talk of, if in terms of just sectors which have, in terms of stock performance, not done very well, I would think, IT services is one you can bet on, where, I mean, we are not hugely overweight. We would be slightly overweight IT services. And over time, I think we moved a little more from the large caps to the mid caps. But as a sector, I think that's a sector which has underperformed for long and might have a better 2026, something like what banking did this year, especially the PSU banks, that after 5 years from 2020 to 2024, the sector underperformed every year except 2022. So after that, they had a good year this year. So maybe something like that might happen to IT services in 2026. But I generally don't like making one-year bets.
Sure. Devina, you briefly spoke about banking, but this year was a surprise in terms of FDI investments in the financial space, right from Shriram to RBL Bank to Yes Bank to Samman Capital. A lot of FDI money has come into the financial sector. Of all the deals that you've seen so far, anything that strikes out for you, and maybe you're betting on any of those NBFCs or financial names?
Not particularly. This year, what we would have mostly added, especially in the first half of the year, was PSU banks.
Okay.
After that, of course, we've done a bit more of a reshuffle, but not so much on necessarily the stocks that have got the FDI.
Sure, but anything that stands out for you? Shriram getting $4.5 billion, RBL Bank getting very large 60% FDI holder now. It's like an MNC bank now. So anything that excites you, or you've looked at adding?
We're tracking from here on how these things work out, RBL in particular. But we haven't made any significant bets there.
I'm curious to know, where are you deploying incremental capital then? What is it that you're buying? Is it the same stocks which you hold exposure to, or is there anything new that you're looking at as an interesting bet?
We haven't made very big changes in our last rebalance. One area where we did add was oil marketing companies. FMCG, we've been adding through the year. As I said, banks, particularly PSU banks, we've been adding through the year. So not necessarily only in the October rebalance. But FMCG also, we would be overweight now. And that's really the consumption story. Again, consumption coming off the very low of the real low was in 2023-24 when the market was still booming. I mean, people kind of woke up to it after the market started going down, but that was the real low, and it has moved up since then, the consumption story. Of course, the flip side to the consumption story is that a lot of the inflation coming down has been food prices coming down. So for the rural consumer, that's their income. So it's kind of a little bit of a tightrope balance, that something which is good for the urban consumer is not so good for the rural consumer, for whom the food is actually an income source and not an expenditure source for the most part.
Devina, I request you to hold that thought, but don't go anywhere. To all our viewers, we will continue to decode the week on Dalal Street and continue our chat with Devina. Stay tuned.
You're watching us here on Editors Roundtable on CNBC TV18 as we look back at 2025, look ahead at 2026. With us still is Devina Mehra. But, you know, before we go back to Devina, Nimesh, Rima, let's discuss what 2026 looks like from the space that we track individually. So, Nimesh, you know, you are all encompassing when it comes to the market. So what is it that you're tracking?
So look, from a market point of view, Mangalam, while we spoke about indices, Nifty 10% higher, 5% in dollar terms or whatever, the fact is 25 was a very difficult and a challenging year to make money. And people have lost a bit of momentum and they've lost money as well because the broader markets have not done well. I'd put out a piece 2-3 weeks back as to how much you've seen the correction in the broader market names. Stocks are down 40, 50, 60%. So that pain is something to watch out for. If that doesn't come back, the biggest risk for this market in 26 would be few things. And the biggest of that all would be the domestic money. Yeah. We all have rallied on the back of DI, the local money, the SIP money, right? The feedback is if the 3-year returns turn negative at a mutual fund level, then the SIPs turn negative. And that could be a big impact on the markets as well. So this is something to watch out for. Second, there is a lot of hope that 26 would be a turnaround year in terms of earnings. But again, there is a macro view as well that at least the macros are not supportive for a big earnings upside. Yeah. If there is no big earnings upside, then again, that's going to be a bit of a risk to this market. The third and the most important would be the FI money. When will FIs come back? For that, I guess the biggest trigger would be the India-US deal. If that takes place, then India comes back to some extent in a sweet spot and the FI money comes in. So again, that is something to watch out for. And the last would be the IPO, the rush of IPOs, yes. The kind of liquidity which is getting sucked out. That is again a bit of a question mark on the secondary market. So these are the few elements to watch out for. My sense is 2026, there is a lot of hope that we'll have a big rebound. That may not be the case because there are few elements which needs to work out in India's favor for India to do well. So that's the market setup. But Mangalam, if I want to ask you for 26, which are the triggers to watch out for within the sectors that you track, FMCG? And more so from an M&A perspective, because there is a lot of buzz about RBA, Sapphire and Devyani merger. A lot of things are happening, right? BBL is getting into non-alcohol and alcohol as well. What is that you'll be watching out for?
So from a consumer space standpoint, there are 3 major triggers that I'll be tracking in 2026. The most important one is the kind of thrust that the government has given to reviving consumption in the last 9 months or so, be it the income tax cut that has come in, the RBI rate cut that has come in, etc. And alongside that, we've had more of the GST rationalization that has happened as well. So will all of that now fructify and the long expected demand recovery come by? We've seen green shoots of that. Does that sustain and accelerate into 2026? If that happens, then these companies sustain their valuations, or else there will be time correction. The second trigger will be a lot of these companies over the last year. If 2025 had to be summed up in one word for FMCG, would be leadership changes. Sure. So you had a new leader for HUL, you've had a new leader for Birla Opus, you've had a new leader for Nestle, you name it. Every large FMCG company has had a new leader. So now they've had their time in settling in the company. Any new leadership change in the FMCG space and the existing strategies of the new leaders, whether that comes to fruition or not, is something that I'll be tracking. And from a category standpoint, the one thing that I will be looking at in particular is this value premiumization or mass premiumization, because we've seen Zudio work very well for Trent, Does that happen with Indian hotels? Do we see Ginger drive a lot of volumes for Trent as well? Obviously, the revenue contribution will not be as much. And Titan itself has announced its foray into lab-grown diamonds. So value fashion would be a big thing that I'll be watching out for. Devina has been buying a lot of these FMCG stocks all through 2025. Devina, what are your triggers that you're looking at in the consumption space in particular?
As mentioned, see, consumption, one thing is overall, if you look at, one is inflation coming down. In fact, there have been products where there's been a negative inflation, where prices have come down, which is what I was talking about in food products. And also, as I said, that from that bottom of 23, 24, consumption has begun to tick up, which should help FMCG companies. And also other inflation factors, also the components have come down, which is basically petrochemicals, the downstream from crude, which is an input for a lot of companies, including FMCG companies. So there's some beneficial tailwinds on revenue as well as on the margin front. But of course, the other thing I would like to say that we are talking about all the things to be cautious about and what are the risks. Let me remind your viewers that sentiment is always a contraindicator. You should be careful in markets when you are feeling too good, when you are feeling too buoyant, which was, let us say, the first half of 2024, when people thought, 30-35% compounding was there for the taking. And so that's when you should pause and think that, am I doing the right thing? When actually you're feeling that there are a lot of risks, that am I feeling anxious? Should I stop my SIP? Should I get out of the market? That's almost always the worst time to get out of the market. So that's why you had this one whole samvat where even the index gave no returns. And as was mentioned, the index doesn't even capture the pain in the markets, which is why the indexes may be hovering around the highs. The median stock is still down significantly. So it's like 70% of the stocks are down more than 10%, something like 30% are down more than 20%. So that's the broader thing that the viewers should keep in mind, that when you are enumerating the risks, actually, usually that's the better time to be in the markets than when you are feeling great that everything is going very well. But don't remain in the same stocks where you are. The market has no interest that you bought the stock at 100 and today it is 60 and you are waiting for it to go back to 100. That particular stock may never go back to 100. So remember that. So look at your portfolio from scratch today. Where should I be invested? But remain invested to the extent of your equity allocation.
Sure. Devina, I want to have your thoughts on the IPOs as well. But before that, I want to ask Rima about the IT sector. Rima, what are the few things that one should watch out in 26?
Well, top down, actually the IT sector has seen a re-rating or a recovery since October. From that level, it's gone up 15%. Top down, the strong US GDP growth help, expectation that Fed rate cuts continue, and sentimentally, whenever the India-US trade deal gets struck, that will be a positive. Sure. But what we've seen this year is that IT companies sort of realize that organic growth is not coming through and they're making acquisitions. Even a company like TCS, which has historically been very conservative on acquisition, they focused on organic growth, internal hires, they never hired laterally. TCS made 2 acquisitions. Coastal Cloud was a large one, $700 million, a smaller one, Listengage. Infosys made a couple of tuck-in acquisitions like MRE Consulting, etc. Coforge will, do one. So large cap IT companies made acquisitions. Next year, will we see mid-cap IT companies also go ahead and make acquisitions? And the third one is on AI. Because maybe, the street realizes, or maybe companies realize that if you want to get some sort of an AI-related multiple, you need to start quantifying your AI revenue. TCS did that. They said we're getting 1.5. TCS, HCL gave it in Q2 where they spoke about the quarterly revenue from advanced AI. TCS did it at the investor day. So if you want, now you'll start scaling up the contribution that you get from AI, and maybe that helps with overall multiples, etc. So these are a couple of things I think we'll watch.
Any large AI play which will come up from an
Fractal Analytics, I think, is the only one which is expected to come in December.
Anybody else?
Nothing that's
Nothing else?
come up, at least in India.
Devina, your thoughts on any of the India AI play, if there is any that you've looked at? And B, from the IPO perspective of all the listings that we've seen in 25, anything that stood out for you?
IPOs, my whole worldview is that when there is an IPO frenzy, it almost never makes sense for an investor to apply for an IPO because most IPOs are crazily priced. And if they are not this is a good business at a good price, you're unlikely to get a allocation. So that's the thing. Also this year, as you briefly mentioned, the other issue has been that the quantum of offer for sale in the IPOs, so which never used to be the case. So earlier it used to be that most of the money should go into the company unless the company doesn't need money. But now you have a situation where the company needs money, but still it is the promoters and the early stage investors who are cashing out. And then they, like in the case of Swiggy, you saw the major 60% of the IPO was OFS. And then, within a year, they are back asking for more money.
More money.
That sort of thing is dangerous. I see that as a danger sign that you as an individual investor or the IPO investor are buying at a price where the promoters are selling at scale. I mean, normally in the secondary market, we take it as a red flag if the promoter is selling.
Yeah.
And here you are like doing that in bulk. So those things, never end very well. IPO frenzies have come and gone in all exchanges over the centuries, literally. I mean, you had an IPO frenzy in the 19th century on the Paris bourse with some few hundred listings in a year, and the next year it went bust. So be very, very careful on the IPO side.
Be very careful of the IPO frenzy. That's the word coming in from Devina as she speaks about, the sectors that she likes. Devina, wish you a very happy 2026. May it be financially, personally, and from a health standpoint, one of the best years for you.